Hello everybody, this is TJ with the PTU Trend Jumper and Netpicks.com. I've been getting a lot of requests lately to do a video walking through our 5-minute chart trade plan for the Euro Yen. This is a plan that has been out there for well over a year now, actually since the beginning of 2013. In 2013 it did quite well too, over 9,000 pips of profit. And it's been doing great in 2014 as well. So I thought I would walk through this week's of trades just to kind of recap a little bit about what we're doing with this trade plan, how we use TrendJumper, and basically what we're doing every day live in the Netpicks TrendJumper trade room. Okay, so let's start off with Tuesday. As you know, last week was President's Day. I never trade on a holiday, so our first day of trading was Tuesday, February 18th. Now we typically start trading the Euro Yen at 8:20 a.m. Eastern Standard Time. Okay, so I set the chart up. We're just going to walk through as if we came in that morning and we're about to place trades. And you can see right here that at 8:20 there's a setup to go short. Now we have to be mindful of a news release coming out at 8:30. We're not going to trade into the news release. We're going to pause for a few moments and then see if we can get into a trade after that. Okay, because when news comes out, the spreads widen. It's hard to execute your trades at the price that you want. And so for us, part of our general way of operating and trading, we always stand down for news. So by 8:25 it had still not triggered in. Now with the Trend Jumper, it's very simple. The main indicator is this dotted line here. Okay, that's the jump line. Now there's some other lines and they all play a role in this strategy, but the jump line is the most important. Normally it's green. The reason why it's colored red on this particular chart is to remind me that it's actually a different setting than our default setting. And the reason why is because we usually use the Trend Jumper with charts that are a little bit more dynamic than time-based charts. We usually use them with tick charts and range bars, momentum bars, Renko bars. But we actually use a time-based chart for the Euro Yen. It's a 5-minute chart. So I had to customize this trade plan a little bit. And the reason why I focused on a 5-minute chart is because many of our members like to use MT4, MetaTrader 4. This trade plan works great on that, and I'll show you an example in a little while. I personally prefer Tradestation charts because it's just so much easier to navigate around, and all my trade decisions are based off Tradestation charts. But as you know, every Forex broker is different. They all make their own market. You have to learn how to trade your own charts. MetaTrader works great as well, and I'll show you some examples as we go through this video. And this also works on NinjaTrader, by the way. So look what happens. The news release comes out and it decides to trigger in and push down towards its targets. Now with TrendJumper, when you see a setup like this, if the little plus sign is below the bar, that means you're going to short, okay, and the targets are down below. If it's above, like over here, that means you're going to go long. And because this is Forex, we have some unique rules. We ignore these targets on really small trades. We actually need our middle target to be 12 pips from the entry. So that accounts for 2 pips of spread and a 10 pip profit. Okay, if that target is less than that, then we're going to ignore those targets, and instead we're going to go for a 15 pip target with position 1, a 25 pip target for position 2, and then we're going to trail a third position. So basically we're attacking this trade plan with 3 positions per trade. Okay, just to give you a little background on how we do it. Alright, so what happens is that it comes down and it hits all the targets, right? I mean, the targets with TrendJumper are very accurate. Like I said, though, they're very small. We're not interested in that. So really what we're looking for is the next trade setup. Okay, this is all a reaction to the news event that came out. It was an orange labeled event as per the forexfactory.com event calendar. It was the Empire State Manufacturing Index, and Forex is very sensitive to economic reports. So we just stand clear Now we're waiting for the next setup, and it actually is a long this time. You'll notice that the market has been rather tight. Not a lot of range during the U.S. session. Hopefully it's going to break out for us. The entry is at 140.856. I'm always going to round that up to 86, right? So our entry goes in at 140.86. Figure 2 pips of spread. We're going to get filled at 88. Notice that the target is less than 10 pips to the middle target, just like I said. So we are going to go for a 15 pip target. It actually triggers in. There's another setup. You could actually take that one as well. I mean, they're both valid. The blue one doesn't cancel. The pink one is almost identical. And the targets are going to be in the exact same place because they're both trades that are too small. Okay, and actually the entry ends up being at the same place too, because we make minor adjustments on our entries to get around key levels. This is something that I talk about and teach in great depth in the training when one is learning the trend jumper and how to trade the strategy. We cover it in the trade room every single day. So regardless, it does stab up and it gets as high as 140.996. So it literally misses 141 by 1 and a fraction of a pip, and then it ultimately stabs through and it gets as high as 141.02. Okay, so it actually hits our 15 pip objective. And now that I'm thinking about this and checking my trade records, we were actually not going to 141.01. We were going to 141.03 because remember, we have to add the 2 pips of spread, right? So even though we're getting going in at 86, we're getting filled at 88. So 141.03 is our objective, and it misses it by half a pip. Okay, when you miss a target by a fraction of a pip, maybe a little more than, with around a pip or so, or a fraction of a pip, you want to trade for profit. You don't want this to come all the way back down. So ultimately we exited this trade at 140.99 and made 11 pips on the first position. And at that point, we're locking in a pip on the remainder of our positions, our 2 other positions, so we're at risk free. So if it comes down hard against us, we get out with a 1 pip gain. If it keeps going higher, well, we make more money on the trade. So it does stab down, hits 89, and we are out of that trade with only 1 pip on the remaining positions. We got 13 pips in total for the session, but this is the minimum required for us to actually quit for the day. So we were literally one and done on February 18th with 13 pips. Part of our trade plan is a dynamic quitting goal that we follow very strictly, actually, and this quitting goal, we call it the power of quitting, is dynamic to market conditions. So sometimes we're going to quit with a small profit, sometimes we're going to get a much larger profit, but the whole point is that it gives us a structure and rules to follow. It fits in with our trade plan quite nicely, and it allows us to take what the market wants to give us while allowing us to quit positive on most sessions and grow our accounts. And that's what we continue to do. The next trade was actually a short trade, and you could see that if we took that trade, it would have gone perfectly to that middle target. Again, the accuracy of Trend Jumper is often uncanny, and that trade would have been large enough to just go with the targets. But because we were already finished with our trade plan, hitting the minimum required amount of profit to qualify for our power of quitting rules, we didn't even look at this trade. We were already finished. That's going to happen sometimes. So let's go on to Wednesday the 19th. Alright, so here we are on Wednesday the 19th. We have to pay attention to news events. We have some red labeled reports coming out at 8:30 a.m. Eastern Standard Time, building permits, a number of reports coming out. So we have to trade around that. And so the report comes out at 8:30. Here we are at 8:20. The report comes out, not a lot of reaction. Our trade is still valid, and it ultimately triggers in about 6 or 7 minutes after the report. And you'll see that we're getting long at 140.15. So we're going to make a tiny adjustment. We actually get long at 140.16, which means we get filled at 140.18. The middle target is less than 10 pips, so we're going to make that a 15 pip target and a 25 pip target to target 3. Okay, and look what happens. It basically zooms to both its targets. We're going to 140.33 and 140.43. So this one easily makes its 15 pip target with position 1. Okay, meanwhile, we've locked in a pip of profit and we are now trailing the purple line. That's our trailing indicator. And that holds the price really nicely. As you can see, it comes down and just barely touches it. Another part of this trade plan is when markets are trending, we are literally able to add to our position with one more trade. And that comes at 9:25. It's at 140.37, right? Rounding up, meaning we're going to get filled at 3.9. And you'll notice it's less than 10 pips to the middle target. So again, we're going to go with the 15 and 25 pip hard targets. And as a result, we zoom up. We hit the 25 pip target level on trade 1. We ultimately are going to hit the 15 and 25 pip target level on trade 2. And we're trailing the purple line up with our third position on both these trades. And that goes up and up, higher. We're ignoring all these other setups. Even though they're good setups, you can see every one of them hit target with an amazing degree of accuracy. But our trade plan is more conservative. We only add to our position one time. Nevertheless, when we finally stop out behind this purple line, that trade in total and the session itself is good for 162 pips. Not bad for a day trade, huh? All right, let's go on to the next day, Thursday the 20th. All right, so the next trade comes in at 8:20 on the 20th, and there's a trade that triggers in. We may want to try to get in sync with this trade if it has not gone far enough. So the rule is if it hits the middle target and has gone 10 ticks or 10 pips, then we cannot take the trade. So it has... Let's see, it gets in at 139.83, add 2 pips of spread is 85, right? So it does hit the middle target, gets as high as 95. That's 10 pips. So we're not going to chase this. If it comes back down, we're not going to take it. We're just going to wait for the next setup. And the next setup actually comes here at 8:45. And the entry's at 140 even, right? So we're going to go ahead and adjust that up to 140.01 to get it off the key level. We get filled at 01, or I should say it hits 01 on the bid, but we get filled on the ask at 140.03. And you can see it's a small trade. We're going for 15 pips and 25 pips. So we're going to targets 140.18 and 140.28 on this trade here. And you can see it has no problems getting to those targets, hitting 140.18, getting up to 140.28, obviously, gets as high as 36 even. So we've made our 15 pip and 25 pip targets. Now we're trailing the purple line, and it ends up stopping out right here at 140. 2 pips below that would be 140.14. And so we make 51 pips on the session. And you can see it's been a great week. So let's see what happens today. The day of this recording, Friday the 21st, it was another great session on the Euro Yen. And in fact, the entire week, it was perfect. We won 100% of our trades. Let me show you what happened today. All right, so again, there are news events we have to be mindful of. Here we are at 8:10, and it looks like it stabs through the short here, but we're not interested in that. We're waiting for 8:20. That happens over here. We finally get a setup at 8:30. There's a news event. It does trigger in. Triggers in at 140.61. Actually, 140.61 is our entry. It would trigger in at 6.3. The middle target's only 1 pip higher, and it has not gone 10 pips. So we're not going to take this trade right at the news release, but we're going to wait a few minutes and it does come down, and it gives us a chance to get into that trade after the news release and the markets have settled down. And ultimately, if you're trading the euro yen, following the trade plan, you're going to take that trade. You get filled at 63. Because it's a small setup, we're going for the 15 and 25 pip level, so we're going for 78 and 88, right? And the stop is down here. So this trade is perfectly fine, and it just zooms. It ends up hitting both its targets, as you can see. Meanwhile, we can add to our trade. Remember, we're allowed to take one add-on trade if the market's trending. And this one, the targets are big enough. So we're just going to go with the printed targets on these. This one gets long at 140.80. We adjust it up off the 10, which we always consider 5s and 10s key levels. So 140.81, 2 pips of spread. We're filled at 140.83. And we're going to get out at 141 even and 141.08. And you can see that it hits both those targets no problem. Now both these trades, this original trade here looks really small, doesn't it? But it's still going because we're trailing the purple line. Same with this one. 2 positions trailing. Up, up, finally stops out right up in here at 141.08, and this session ended with 145 pips, and we finished the week with 371 pips. Our power of quitting keeping us out of the market after we have hit our goals. You'll see how dynamic it was, right? On Tuesday we made 13 pips. On Wednesday we made 162 pips. On Thursday we made 51 pips. And today on Friday 145 pips. That's 371 pips for this trade plan. And that's it. And of course, it's dynamic. It's not always going to be this great. Last week, it was kind of up and down. We only ended up with 26 pips of profit for the entire week. But the week before, it was up 410 pips. The week before that, it actually had a loss of 174 pips. And then the week before that, it was up 65 pips. So the point is that, you know, you're going to win, you're going to lose. There's no way to avoid losing trades. But the trade plan itself has a winning edge. It is constantly growing the equity. It's winning. It's weekly and daily sessions a really great percentage of the time. In fact, I'll look it up right now. It's winning its daily sessions 77.6% of the time. And every week, it's got a 77% chance of having a positive week as well. So it's been a really robust trade plan dating back to the beginning of 2013. And what's really comforting about this trade plan is that today, this week, as with just about every week with all the trade plans for TrendJumper, it just continues to perform the way it was intended to perform. It's not doing anything different. It's just doing what it's supposed to do, and that's a great way to build a business and to profit as a trader on an ongoing basis. So let's talk a little bit about some Forex swing trades. Also, before I finish this video, I kind of want to show you how we're using this exact same trade plan with end of day charts, with daily charts and Forex. And actually, I almost broke my promise. I promised I was going to show this on MT4 as well. So here is today's session on MT4. We'll take a brief look at this, and then we'll look at some swing trades. So, you know, this is with Owanda, and they use Eastern Standard Time just like Tradestation. So these charts line up almost the same, almost the exact same trades. A little bit of variation. If you're trading with a broker that uses GMT, you're going to have to, you know, just transpose your time so that you start at 8:20 Eastern per the trade plan, but you just learn to trade your own charts. So we're looking to get long at 8:20, right? So here we are at 8:25, and it gets long through news, just like we saw with the Tradestation chart. So you're not getting long in here. You got to wait for the news to kind of settle down, but when it pulls back down, you're able to pick up the entry. And, you know, the same thing occurs. The stop is down here. The trade's small, so you're going for your 15 and 25 pip trade. If you click on the bar, hold the Alt key down, you can see the trade over here in the data window. There's your entry. Here are your targets. You're going to ignore them because they're too small. You trail the purple line. Here's your add-on trade, right? That trade was much larger, so you're going to go with those targets. And you can see that it has no problem hitting them. Hits it here, trailing the purple line, and it stops out. Almost the identical trade. TrendJumper works great with MT4. I just personally prefer Tradestation charts. Alright, so there really have not been a lot of trades so far this year in 2014. There's been some, and I'll show you one that just finished. We'll talk about the trade plan a little bit. We'll look at some of the results over the last couple years. I personally am following 12 pairs. The CAD yen is one of those pairs. And the first trade of the year actually happens here. It's a short. Okay, it looks like we may have had a long over here, but as I teach in training, that trade actually was not a trade because I make additional adjustments on my entries and stops. Something I've learned while trading this strategy, and it's one of my ways of asking for a little extra confirmation and dealing with a spread that is often changing, right? Spreads can widen and tighten moment to moment, so I always make adjustments around my entries and stops, and that the adjustment that I typically make kept us out of this trade here, which was good because it ended up being a losing trade. So that was a non-trade. The first trade came here on the 21st of January. And I explain this in great detail in the training. So this trade gets short at 94.74. I make my typical adjustments, and it actually gets short at 94.68. And it comes down, and you can see that it has, within 2 days, it's hitting all three of its targets. And that's over 329 pips. The way we do this is that we're exiting one of our positions at target 1, one of our positions at target 2, one at target 3, and then we're trailing the fourth position. And the fourth position went down even further, and it was a really beautiful trade all the way down to here. You got out at 92.14 after all the adjustments and spread. And so this one trade made 583 pips in total if you add it all up, right? So if you're trading with a large account or a small account, it really doesn't matter. You need to use a broker that allows you to use micro and mini lots, and then the combination of micro and mini lots allow you to fine-tune your position size so that you never put on too much risk. I recommend that you use anywhere from 0.75% to 1% risk. You take your account total, you risk up to 1% on any one of these trades. And the reason why we don't risk more than that is because, just like I showed you with the Euro-Yen day trade plan, we will stack our positions. We're going to add to our positions. And if you could add more than one also. You could add up to 3, actually 2.5. So you could literally have 4 live trades, 1 primary and 2.5 add-ons. And so, like you could see late in the year in December, finishing this year, you can see that there's a yellow trade here, there's a chance to add here, there's a chance to add here. All 3 of those trades ended up making enormous profits, right? You hit various targets on each one of them, and so we want to always go into these trades with very small risk, never more than 1%. If you have 1% on each of these, then ultimately you're going to have 3% risk on this one pair. And so we have to be very responsible, and we let our accounts grow over time. We just let the robustness of the strategy grow our accounts. That way, if we hit a period of losses, we're going to be able to be okay. And a really great example of that is the Euro-Yen, actually. If I show you what happened with the Euro-Yen, you'll see why we have to go with small risk on every trade. All right, here's the Euro-Yen, and I reduced this down really small so I could kind of show you the big picture story of the Euro-Yen. The Euro-Yen was the strongest performer of my list of 12 in 2012, and it gained an enormous amount, especially near the end of the year. It literally made thousands of pips on this move up because you could see all the add-on trades and the trailers, and the accuracy of TrendJumper is just phenomenal. In fact, I'll show you the results in a moment. And then it kind of got you know, choppy. There were periods of time in the middle of 2013, particularly in the summer, where there just was not a lot of range with the euro yen. There were some winners, some losers, some winners, some losers. By the time we hit September, the euro yen was the only pair out of the 12 pairs that was a little bit negative for the year, for 2013. And if you were putting on way too much risk, you would have given back a lot of the profit that you would have gained in 2012. But by going with small risk, you retain stability in your account. And then when it finally does break out, like it did at the end of 2013, this made thousands of pips in here. The year ended up quite good, actually. So while we ended up with several negative months worth of trades on the euro yen, by the time the year ended, it finished with over 2,800 pips. So it was actually a really good year. But because of our small risk, we were able to hang in there and enjoy those profits. If you were going with risk that was too large, you end up with a winning strategy, but you still lose money, because through a lot of this grinding low range action that occurs with Forex sometimes, you may not have survived 2 or 3 losses in a row or 2 or 3 negative months in a row. That could certainly happen. These are daily charts, which means you're only going to get a few trades a month, 1, 2, 3 maybe. And so if you get 2 or 3 months of losing results, it's really not that much in the grand scheme of things. It's only a handful of trades. Okay, and that does not make or break a trade plan. You need a much larger sample size. You want to keep your risk small so that when it does explode, you're going to be able to capture those monster moves. Now remember, each pair is going to move dramatically 1, 2, maybe 3 times a year. And that's why it's important to protect your capital so that you could take advantage of those moves. That's exactly what happened here at the end of 2013. And then look how 2014 starts. Strong winner right here. You can see how it comes down, hits all its targets, trails down. The add-on trade comes down, hits a nice big target. We're really aggressive with our add-on trade, so it literally is stopping out behind this pink line here, protecting our profits for a really nice winner. And then we're in the blue trade. And the blue trade, again with our adjustments, looks like it stabs down and stops out, but it doesn't. Because of the extra adjustments that we make, this trade actually survived. And now it's popping up, and it's getting close to its first target, and we literally might be taking an add-on trade here on Monday. Just another trade. But, you know, it's the same trade plan. We're using the same trade plan on every single pair. Let me quickly show you how effective this has been. In 2012, I literally only followed 10 pairs. I followed 10 pairs. I added the CAD yen and the Aussie CAD in 2013. Okay, so 10 pairs in 2012. And we only did 2 positions. We traded to the 3rd target and trailed. And it made over 40,000 pips. And some of the months were losing months. Look how well the euro yen did. The euro yen right all the way across, over 7,266 pips. It was the top performer of this list of 10. Look what happened in 2013. Okay, it started off strong. There were no trade totals to be had in February. And then we had a losing month in March. So we're literally net negative for the year. A couple winners, modest, nice big winner. And then we had 1, 2, 3, 4 out of 5 losing months. And we were negative by the end of October. And then we saw the big move in November and December, literally up 2,800 pips. This is using 4 positions for 2013. And the 2 years combined over 10,000 pips. Okay, 10,000 pips. So if you start out small, you grow your account, the 1% risk grows with your account. That's how we do it. Look at the results on all these other pairs. The Aussie yen, pound US, over 6,000 pips on the cable. Pound Aussie, that was the star of the year, 11,000 pips. Its close cousin, the Euro Aussie, over 10,000 pips. Pound yen, big performer in 2012. Again, it was up and down, up and down. It took a lot to digest the major moves that occurred at the end of 2012, and it was reflected in the low range on the yen pairs. Only 1,800 pips for the pound yen. Look at what it did the year before, over 6,000 pips. And you know, you can just look down this list. We actually had one pair that was negative by the end of the year, the New Zealand yen. It underperformed. But all in all, the list of 12 gained over 55,000 pips in 2013. Here we are in 2014. I still got to catch up. I got to go and update my records. I showed you the CAD yen gained 583 pips. The Aussie New Zealand came out the gate really strong with a strong winner, but posted a couple losing trades also. It's actually negative 554 pips. We'll see how this year shapes up. You know, price action moves, the markets move, TrendJumper works. I'm sure we're going to have a great year in 2014 as well. All right, this is a long video. I'm going to call it quits. I hope you enjoyed it. If you'd like to know more about the TrendJumper, you can visit our blog, PTU TrendJumper.com. This is TJ with Netpicks.com and the TrendJumper trading strategy. See you on the next video.